some videos, and some of these events are were public events. Some events that we're going to provide for you will be things that we do only for our VIPs, but we want to kind of give you a sampling of that. So we have different types of media that we're going to be sending out to you guys throughout the month of September to kind of help you understand better what we do here and why we do it and how we do it. There's an awful lot of information to try to cover, and people tend to have an awful lot of very good questions. And then sometimes people don't know the right questions to even ask. So we try to provide as much information as we can to everybody to make sure you have what you need to see if this bunt trading thing is the right thing for you. So we're going to get started this morning. We're going to start talking about an undeniable edge. We have an edge that we exploit every day in the trading room. I see we've got a few of our traders here this morning, and a lot of what I'm going to show you today is not really cherry-picked type stuff. This stuff is actually stuff that we see every day in the trading room. I used to be a struggling trader for many years. In fact, I started out as a remodeling contractor, and I was exposed to trading pretty much the same way many of you were. It looked really easy. And I thought, well, heck, this sure seems easier than the work that I have to do as a contractor. So I started trying to put together a trading career. Figured I was going to knock it out in just a few months and then be a professional trader, and I could, have a much easier life. And of course, that didn't really work out the way I had planned. I had struggled for about 7 years. But since then, I managed to turn things around by adopting some of this this bunt trading philosophy that I have now that I'm sharing with you guys. I've been able to trade full time now for a little over 8 years. I became a trading educator, system developer, and an indicator developer. Now we do indicators for NinjaTrader, TradeStation, and we're getting close to having the multi-charts indicators available as well. So my mission when I started, let me back up just a little bit. I will not be reading the messages in the chat. Those messages will tend to distract me. So if you have any questions, feel free to ask them, but they will be answered by other people, either Praveen or Lisa or Connor, or one of our other bunt traders will answer those questions for you. If you have specific questions for those people that are trading our system, feel free to ask, and hopefully our traders that are here with us today will help answer those questions. If you have questions for me specifically, hold those questions, and I will answer them when we get to the end of the presentation, okay? So my mission, when I decided to start working at this whole idea of finding an edge, was to take a look at a chart and see if I could find anything on a trading chart where something very specific happened, and then go about finding out if I could figure out why it happened. Okay, so as a contractor, my job and the thing that I was actually best at was problem solving. So I decided I was going to quit struggling at trading and listening to all the gurus that weren't seeming to help me. And instead I thought, I'm a real good problem solver. What if I approach trading as a problem? And so I see this as a challenge now rather than something I'm trying to learn. I just look at it as a challenge. And so I look at a chart and I said, okay, well, I see something very obvious. And something obvious to me is that price stops and turns. It just stops and then changes directions for some reason. If I can just identify what that reason is, or reasons, more than one reason potentially, then that's an edge. So that became my mission. And ultimately, I came up with these indicators, and we're going to talk about these in a little bit, that tell us when these turns are about to happen. Okay? And these are the tools that we use every day to tell us when to expect price to stop and turn. All right, so what's the one thing that would definitely give you an edge in your trading? That one thing is predictability. Okay? That's an edge. If you can predict when something is likely to happen, then you have an edge. And you don't even have to have a huge edge, just an edge. If you can predict when something is likely to happen and when to buy and when to sell. So let me give you a few facts here so you can see where I'm headed with this. About 70% of the trades that are placed today are from these high volume trading computers in the most liquid instruments that are being traded. About 70%. Now, initially, a lot of you think, well, that's not fair. You know, they have an unfair advantage. And a lot of people will hear that about 70% of the trades placed are by these HFTs or high volume trading computers and think that they're spending 70% of their time in the markets as well, and that we're constantly fighting these guys. To be honest, even though they play 70% of the trades, they are in and out of the market so darn fast that the amount of time throughout a day that they're in the market is actually very small. The time scale of these trades has been forever shrinking, and they're going to be faster tomorrow or Monday than they were on Friday. And this can have a real impact. Okay, a lot of traders still struggling to trade the old way, with the old information, with the old time scales, and not taking into account the fact that these HFTs, these market makers, are in the markets really manipulating things. It's always been manipulated, but now they can be done in microseconds. Okay? The better you understand what's going on, and the better that you can react to what's going on, the better edge you're going to have. Okay? The more successful you can be as a trader. So we're looking for this edge. So whenever I look at a chart, I want to know where something specific is happening. If I know what's happening, then I know what's likely to happen next. So if I can pick up where these HFTs are going to work, and I know what happens after they do their thing, then I have an edge, right? So this is what I'm looking for. When we're looking at a chart, we're looking for these high frequency traders, okay? These HFTs. They could, they're quants or even hedge funds that have paid these guys, the programmers, just millions and millions of dollars to run these very sophisticated algorithms to get in and out of the markets for various reasons. But there are 6 main strategies for HFTs, and really, to be honest, for our purposes, we don't really need to know or understand these, okay? But just so you know, there's like 6 different strategies, and a couple of them, they're to provide liquidity to the markets. Okay, and they get the rebates from um, from the the CME and the other exchanges. They also there's a couple of them that do the like tape reading where they're it's called filter trading. where they're looking for significant volume changes, or there's momentum reading where they're looking for supply and demand imbalances. Then there's statistical types of HFTs that are doing, they're exploiting the pricing differentials between these correlated securities. And then there's technical trading, which is what we do. And we're looking for technical setups based on predefined patterns in the market, okay? Now, again, these definitions are all interesting, and there's a lot of information that is out there about HFTs, but really, to be honest, a good definition is still kind of evolving. But for what we do, it's really not that important that you know these things, other than, as it's very interesting to know how they work. But to know that the markets are now being manipulated by these HFTs, or these quants that have spent millions and millions and millions of dollars to manipulate, to create a reaction. Okay, so what is important here is that there's a high volume of relatively short-term trades entering the market at certain key locations, such as critical support and resistance lines. And remember, we're gonna talk about this support and resistance here in a minute. And that we can capitalize on these market manipulations. Okay? Now, with that being said, do I want to trade against these HFTs, or even attempt to trade with them? It's not likely that I would be able to do anything either against or with them. They are much too powerful and much too fast. So it would be ridiculous for us to try to trade with or against these mega computers designed to manipulate people's behaviors. Instead, what I do is I trade, all of us, the Bunt traders, trade against retail traders who are going to act predictably every time something happens. Every time something specific happens. And there's our edge. If you, as a retail trader, tend to do the same things over and over and over again, which most of us do, then if I know this, I have an edge. Okay? So let's take a look at something here real quick. Oh, whoops. It's supposed to be. Wait a minute. Let me see if I can back this up. Uh-oh. Oh, no. Oh, there we go. There it is. All right, now, this is a video of just any old day in the market, and we're just watching price move around, and we're looking for an edge, and, there's really nothing that seems really obvious to us. So, and this video is sped up just a little bit. So price is just doing what it usually does. And you're probably just sitting there, or looking at lots of different time frames and lots of different monitors and lots of different tools and time and sales windows and level 2 data. And, you're looking at all this stuff, and you're really not sure what you're seeing because you're looking at so many different things. Now, let's take that again. And now let's apply an indicator that we have that helps us identify where the HFTs are actually manipulating the market. Notice what happens. Now, we picked up that an HFT manipulated that down bar, and look what happens immediately following. Price pulled back. Watch. Oh, no, this one doesn't have it. All right, so now we're going to apply our suite of pullback indicators. And I'm going to go over each of these indicators with you again. But let's apply all of our pullback indicators. And now we'll watch price drop. Now, you see these dots? These dots are telling us that price is likely to turn. Then we have the diamond and the arrow with the tail on it. We have an oversold condition. I'm going to go over all this with you here in just a minute. But now we have a confluence of information. Confluence meaning multiple sources of data suggesting that price is going to stop and pull back. I showed you that chart where it didn't look like anything specific was going on, but except for these areas where price stops and turn. And my mission was to go and identify everything that was going on inside of the bar just prior to the turn. And I started noticing a pattern. I started noticing that certain things were happening. All right, so the good news about these HFTs is that these machines always leave a pattern. Okay, these HFTs always they are regulated so that they can't completely hide from us. Most retail traders don't know what to look for, or don't even think to look, because some of the opportunities are very fast. They're not huge opportunities, but they're opportunities that happen over and over and over again. These patterns that they leave give us this increased predictability that we're looking for. You know, these are footprints in the sand. So if you see one footprint headed in a certain direction, you know there's probably going to be another one right after it. So it's very predictable. We've designed indicators to help us detect when this high volume trading computers go to work, and we've developed very precise trading rules. Okay, if you saw the event last week, not last week, on Thursday, we went over the step-by-step process for qualifying the trade setups. Okay, so this is the whole idea about having a rules-based type of a trading system. So my mission was now to go and find out since I figured out that when these HFTs are or any of these market makers are manipulating the markets, a reaction happens. And I went to go find out how I could identify when these HFTs are going to work. So I came up with this thing. I started watching the time and sales window, and I watched these orders going through, and I noticed when the order flow increased to a certain level, kind of like a speedometer, I would notice that price would stop and pull back. So when it became apparent that the orders were going through faster than retail traders were likely to be able to trade that fast, then of course I realized at this level price is being manipulated, and it's being manipulated for a reason. They're not just doing it to try to whip you out. Now, most people think when price is being manipulated, they're doing it to whip you out. We're going to send you a video that explains very clearly what exactly is going on when you see these sudden price moves, these sudden manipulations. Okay, this is going to be our video that we're going to send you on volume spread analysis, but I go into a lot of detail on how these market makers are actually manipulating the markets and what is actually happening, not what most people think. Okay, so when these orders go through at a particular rate, at a particular speed that I was noticing, price would stop and turn right after that. Okay, so this is when I developed a speed tick indicator. Now, that's these little white ones. That's when we've got we're in our sweet spot. That's when we can anticipate that this is a predictable HFT. Okay, now there's a chance that it's more than an HFT. Okay, or a single HFT. So it's like a race car with a speedometer, maybe. Although I'm not sure they even have speedometers, but you can reach a certain level, and you know that that's about the level where it's the safest for you to drive this car at that particular speed. If you go beyond that, it's actually more speed than you're used to being able to predict what's going to happen next. So this is exactly what we have with our big blue speed ticks. We've kind of gone outside of what we think is a regular manipulation, market manipulation. What it could be is an unscheduled news event or a scheduled news event or something like that, where we've exceeded our threshold that we're looking for, our sweet spot, by at least triple. Okay, so we stay out of these because it's really much more volatility than we can anticipate what's going to happen next. Then we have these medium blues. It's about 2 times the level of our sweet spot. We still trade some of these, but again, it's not really it's a bit more volatile than a conservative trader may want to trade. Our sweet spot's going to be these small white ones. These are telling us, okay, we have a potential trade set up here. In fact, these are our speed ticks. These are the ones that we use for our trigger. Okay. So we're looking at the rate of orders going through at a particular rate so that we can anticipate that these HFTs are manipulating the markets right now. Remember what we're doing. When this manipulation takes place, people react predictably. That's the secret. I don't care about the manipulation itself. I care about how people are going to react to that manipulation. And that's where my edge is, right there. Okay? So on this slide, you'll see that we have some momentum of some pushing down here. Okay? Then we've got a indicator suggesting that this bar had been manipulated by an HFT. We also have an indicator here based on volume spread analysis that says the price action inside of this bar is such that the sellers were very involved and interested until price got down to this level, and then the buyers were crazy interested. Okay, so the buyers got very involved. So this is reading every single bar. This is also telling us that the buyers are more interested than the sellers later in the bar. There's a kind of a churning action of buying and selling. Now, I had no setup here because I wanted to wait for the next bar, which is oversold. Okay, there's a weakness. Now, price is having a hard time getting through this support and resistance line. So at the open of the next bar, right here, is where I put my trade on. As it turns out, they also have divergence. So even though price looks like it's heading downhill, this divergence signal here tells us that momentum has actually shifted and it's going the other way. So this is a divergence indicator. This is an extremely powerful setup right here. You have a speed tick on this bar, and then when this bar opens, we have a divergence signal. And that's where our entry is. All right? That's basically, that's a pullback trade. That's called our speed flash. That's it in a nutshell. Same thing up here. Now this is not cherry picked, and I want to make sure you guys understand that this is not just something that's cherry picked. This is an image I use a lot because then I don't have to go and recreate the same thing over and over and over again. Every day, this looks like any chart that we use. All right. So again, speed tick, open of the next bar, divergence, price drops. So my entry was at the open of this bar. I shorted it. Now, if you want to see some videos, I've got a video here of some of our trades. Connor, can you type that link into the chat. We've got a whole bunch of trade of the day videos on our YouTube channel, and you can watch these and listen to me give you descriptions on. I usually on the video you'll hear me call out a trade before I enter it, and then after the trade or during the trade I'll give you whatever commentary I can during the trade, and then after the trade I go over the trade with you in the room. All right, so you'll see these on the videos on our YouTube channel called Trade of the Day videos. All right. So when I started doing this, just like many of us, we have our indicators, we have our favorite style of trading, we have all of this information that we've collected throughout the years, trying to figure out this trading thing, and we hang on to each of these indicators because they all have value. You know, they all provide information, and there is a misconception out there um, that I hear over and over and over again from people, and that is that you can't have too much information. That you just want to, and many of you may be here today or listening to me on the video because you're like, well, it's more information. I can't have too much information. Now, the more information I get, the smarter I am, the better I'll trade. True, you may be smarter. Not true, the better you'll trade. Too much information can cause too much confusion. That finally became clear to me. And I decided just before I quit trading altogether that I was going to, because I realized after 7 years, I finally had this epiphany that even though I felt that I was so close to being a winning trader, I mean, I was close. And I had all these different trading systems that I bought and trade rooms that I went to and things that I had learned and trading forums and all this other stuff. And I felt full of all of this information, but there was I was so close. Man, I was so close. But there was one little piece of information I didn't quite have yet. So there's where I just kept looking and looking and looking, but I never could get there. And I realized one day, I am no more successful a trader after 7 years than I was the very first day. In fact, I was probably worse than I was the very first day. The very first day I traded, of course, I was a huge winner. And I thought, well, hell, this is easy. I bet you were too, right? You start out trading, and that's what really bites us. Gets us. We get bitten by the trading bug because it seems so easy, and it probably was easy at first. But after 7 years, I wasn't any further along. In fact, I was way behind in money, and I wasn't any further along at becoming a consistently profitable trader. So I decided to start out with a clean slate. And again, I'll go over this with you again. I started looking at a chart and seeing where I could exploit or try to exploit something that's very obvious on the chart. And this is where all of our indicators come from. I'm reading what's going on at that time that price stops and turns. What is it that the market is providing? And that's where those footsteps are that I found. That the HFTs, the quants, the hedge funds are leaving for us to find. Okay? Now, the strength is in the fact that we have, let me back up here, multiple indicators suggesting that something is going to or likely to happen. You may have followed other types of trading systems where maybe it's a divergent trading system or a volume spread analysis trading system or an order flow trading system or a volume-based trading system, or you may have followed a particular type of trading system in the past. What we've done here is taking the best of the best and only the best information on each one. And when they all are in agreement with each other, then we have a confluence of information from which to make a decision. Okay? So we're combining these multiple strategies for trading. And when we combine them, we make a single strategy. And this is what we call confluence, okay? So here's an example of confluence and how you can use it in your everyday life. You know, we're competing, right? You're competing with other traders. Trading is a zero-sum endeavor, right? And that means that for every winner, there's a loser. So you're actually competing. It's an auction process, okay? So just like in an auction, if you know what your competition is up to, then you have a little bit of an edge over them. Excuse me. So based on these indicators of what these people are doing, can you really tell what their intentions are using a single indicator? So you see a frown, and so do you know what this person is likely to do next based on this frown? Or do you know what this person is likely to do next based on the fact that he's wearing a mask? Or this guy with his shoulder hunched up, do you know what he's going to do next? Or holding a pen in his fist, do you know what he's likely to do next? Not really. Not with just a single indicator. Now, if we combine all of those indicators without having any other information, this guy's intentions seem pretty obvious, right? Still got the same mask, still got shoulders hunched up, got a fist and a frown. Okay, so all of this now you have information from which to make a decision. Do I run or do I fight or what? You know, doesn't mean it's going to be the right decision. It just means you have good information, much better than just some guy who's got a frown on his face. All right, so this is what we're doing when we're looking for confluence. Now, we use non-correlated indicators for this confluence, right? We don't want to read lots of different levels of price action. Now, we want completely different non-correlated sources of data like price and volume and order flow, momentum, support and resistance, and other things. And even though there's some overlap in some of these, they're generally very different. And when they come together and they all say the same thing, then we have this confluence. And when we have confluence, now we have a system that we can have confidence in. Okay? So to have an edge, confluence is the key. All right. So in this top example, we have a new line of resistance, meaning that price is not likely to be able to break through this line because we have a very strong line of resistance here. We have an overbought condition, which is suggesting that price is getting weak up in this area. We have a speed tick suggesting that this bar was manipulated by the HFTs. We have a ricochet suggesting that the order flow increased dramatically over the prior bars just on this bar. And then behind that, we have our pullback alert. And that's the one I told you about where the buyers and sellers got into it. And they were kind of competing at one point, and it looked like the sellers were taking control. And then we have a divergence signal on the open of the next bar. So this would have been where I shorted it right here. Okay, so we have a confluence of information, all suggesting price is going to drop. Same thing down here. We have a major line of support. We also have a minor line of support. We've got some momentum. We've got an oversold condition. We've got our pullback alert, a ricochet, speed tick, and another pullback alert, and a divergence signal, and up price goes. So look at all of this. Now let's see, Raymond, you just spent a week just hanging out with us, right? In the trade room, with no prior knowledge of anything other than what you saw in the webinar. Do we see a lot of this? I mean, this is absolutely not cherry picked. This is what we see in the trade room every day. You see this confluence, and then everything tells us to expect price to pull back. And by golly, most of the time it does. All right, so support and resistance. I talked about support and resistance. Why do we care about support and resistance? We care about support and resistance because other traders care about support and resistance. Now, I'm not sure what you know about support and resistance, but why does these support and resistance, whether you're using floor trader pivots or Fibonacci's or whatever, what gives pivots their power? People do. Pivots have, there's no line drawn in in the world that's just that has any reason to be there other than the fact that people have decided that at this area we may get some sort of support and resistance, and if people believe it, then it exists. Okay, so they are a self-fulfilling prophecy. Now, if I know that other people believe that there is support or resistance in a certain area, and that they're likely to act predictably, then I better be paying attention there. Yeah, yeah, that's a big thing for me. Trading just about killed me for so long that because I couldn't manage my emotions, I just never could. So I decided, well, let's see if I can create something that removes the need to manage my emotions, or at least removes a lot of it. So that's where this whole bunt idea came from. We've got our major lines of support and resistance. People really like our pivots. We call it our FT reset lines. And we have at the end of the FT reset lines, we have a number, and this number is a relative strength number, and this tells us um, the higher the number, the more likely it is that price will react to that line if price approaches that line with some good strong momentum. If price just drifts up to a line, it's less likely that line is going to have a whole lot of value. But if price moves hard and strong into that line is the higher the number, the more likely it is that price is going to react to that line. Now, my mission from day one was to keep all of the superfluous information that we cloud our minds with out of trading. One of those things that really made trading so difficult for me was all of the shades of gray, all of the different things I had to look at, and then put them all together in my head to make a decision whether I had enough information to enter or not enter a trade. So whenever I entered a trade, I never really had a lot of confidence in myself to know that I looked at every criteria I needed to. Yeah, so the chart on the right is a very typical trading chart that a lot of people tend to try to use. And I didn't, this is actually all of the information on the chart on the right is also on the chart on the left. The same information. These are actually the same charts. You notice the chart is up here at the top with all of this information, but all I needed was this to identify when price was going to drop here. That's it. And so I removed all of this unnecessary information. Now, I'm still getting the information that's important. The information I need for decision making that I get from all of this is still over here, but I've taken that and I've removed all the clutter. Okay? So now the downside of this for us who are trying to help people, make trading easier and less stressful is that a lot of people come in here with a preconceived notion or an assumption that trading is or should be complicated. And if they see something this simple, how powerful could it be if it's that simple? So they want this. They want complicated because they think it's supposed to be. If you ever read trading forums and you listen to all of these guys that think they know what they're talking about, they're going to make it sound very complicated, and you start to believe it has to be. Well, I've gone to a lot of effort to make it much less complicated. So when markets are overbought or oversold, here's an example of how I've tried to make it much less complicated. We're looking for areas where the markets are overbought or oversold to determine when there are weaknesses. Okay, and this is again with these weaknesses are the important part for us to know when price is likely to stop and turn. Now, a typical way of doing that is using a momentum oscillator, which you see down here at the bottom of the screen. So a lot of you use the RSI or MACD or whatever at the bottom of your screen for determining when price is overbought or oversold. Seems perfectly logical, right? But to be honest, all I really need is these pieces of information right here. This information when price is overbought or oversold. The rest of this stuff, I don't need it. It's just taking up space, and it can lead to confusion or at least indecision. So, and areas or shades of gray that you don't need in your trading. So instead, I've removed the oscillator, and when price becomes overbought or oversold, we just tell you that right on the current candlestick. This prints on the current bar. So if this bar opened and or this bar opened and it wasn't overbought at the time, as this bar was growing and it becomes overbought, then in real time on this bar it turns pink. This outline turns pink. Okay, so I'll know immediately, bam, oh, we're overbought, and that soon we expect price to turn and turn around and pull back. All right, same thing for determining divergence using the same chart, using the same momentum oscillator. Very typically, if you use a momentum oscillator, you're going to see something like this on your chart to try to tell you when you have a divergent condition, if you even find an indicator that does this. Problem with these is they're usually about 3 or 4 bars late and they print backwards. They print the lines backwards. So you never really know about a divergent condition until the opportunity to use that divergence has passed. So again, I've removed all of this stuff and done something very simply that as soon as the open of this bar, if we have a divergent condition, it prints this little lightning bolt. It's called our flash. Divergence is one of the most powerful trading tools you'll ever find. A lot of people don't use it because it's complicated. It's difficult to train yourself to see divergence. And therefore, I created this indicator because I'm way too stupid to train myself to see divergence, or I'm too lazy or whatever. But now it just shows up. We have another indicator that uses the same algorithm for determining divergence, but instead of using the RSI oscillator, we use the MACD oscillator. This is called our McDiver. And you see the little diamond that also shows us a divergent condition. Now, I mentioned this pullback alert and volume spread analysis that we use inside of this. we're reading the volume of that's coming into that bar. I do get a lot of questions of people say, well, you don't use volume. How can you not use volume in your trading? Everybody's expecting to see a volume histogram on the chart, thinking I'm not using volume in my trading. I use volume in my trading, and there it is. It's inside that indicator. Only the most important type of volume I get an alert on. There's lots of volume that comes into the markets all the time that really don't have any bearing on what I do. I only need to know what I need to know, and the rest of it, I get rid of it. I filter it out. Now, I could go into a lot more detail on this, but we're going to send you a video on the volume spread analysis indicator, and on how inside the video is also how the market manipulators work. It's very important to understand that, to understand what's going on with this pullback alert. Okay. Talk to you about the speed tick indicator. I'm picking up where the HFTs are most likely manipulating the markets because the markets are moving faster than retail traders are likely to be able to move them. Okay. There's almost no way for the typical group of retail traders that are in the market at any one period of time to move the orders through that fast. And that's what we're picking up. And when that happens, that's telling me, oh, the market manipulators are at work here, and they're doing it for a reason, and I know what's likely to happen next. All right, now when I developed the speed tick indicator, I also noticed something with the, when I developed the whole thing, there was a histogram created. That's an underlying histogram. Actually, it comes with the indicator, and you can put on the charts if you want to, but you don't need to. I just look at the signals. But I did notice that when the speed of the orders, even though they don't reach a certain threshold to tell us that for sure that it's an HFT type of activity, I did notice that if we did get a rapid increase in orders going through over the previous bars of the histogram, that price often stopped and turned right there, and that was kind of a byproduct of the development of the speed tick. So this is relative order flow that we're reading for the ricochet indicator. So again, confluence. I already showed you all of this. I'm not going to go through each of these again. We're looking for a confluence of the best trading strategies, best styles of trading. Yeah, exactly, Andy. Exactly. Yeah, we love impatient people and people that panic. That's and you hear a lot about people complaining about the HFTs and the unfair advantages that they have. I hear a lot of complaining about that. Those people that are complaining about that are our targets. Those are the people we take advantage of. Those are the people that haven't figured out that those HFTs give us an edge. I love them. We actually call this setup here our low-hanging fruit, although we haven't referred to it that way in the trade room in a long time. That was the official, was an LHF, or low-hanging fruit. Man, whenever you see this type of setup with this type of confluence, man, you got to trade it. There's just nobody in our room that doesn't trade something that looks like that. It's like right in your face. Nothing is going to be more obvious than price is turning when you have that kind of confluence. Okay? So we've got our trigger, which is the speed tick. We've also got, and we're going to send you videos out on these things also throughout the month. Our speed flash setup, where we have a speed tick, an overbought condition, and at the open of this bar, divergence and price drops. Now, am I looking for this drop? Not so much. You could, I mean, you could trade this if you want to, but part of what we do to reduce the stress and just put money in the bank, we're looking for this little pullback here. This is really our edge. You could try to trade for a complete reversal, or you could just trade this small pullback here. See, my anticipation on every trend is that it's going to continue. Excuse me. Um, so I expect that every trend is going to pull back a little bit, and then it's going to continue and pull back a little bit and continue. Now, I don't know whether it's going to be a reversal or not, but I do know I'm going to get a pullback. So I hard target here. And you'll learn more about that in the upcoming stuff that you're going to receive this month. Same setup, but instead of a flash, we have the McDiver. Okay, so we have some momentum, an oversold condition. Speed ticks suggesting that this bar had been manipulated. A pullback alert suggesting that the price action inside this bar says the sellers were very involved until the buyers decided, okay, price in this area is now in an area where we want to get very involved, very active. And that told us here that we had a lot of churning activity between buyers and sellers. The buyers actually took over. This bar opened with divergent signal. Bam, up it went. And that's our sweet spot right in here. I'm usually in and out of a trade in less than a minute. Usually. We also have another setup called a Rico dot setup. And again, the logic is very similar. We're using the price or the order flow along with the volume flow to determine if we have a potential pullback. So we call it a Rico dot, ricochet and a pullback alert. We've also got another one that it's not an official setup yet, but we do have the ricochet. So that is reading relative order flow and then divergence. So another strong setup. Now, for those of you that have a lot of questions, you can certainly ask me questions, and I'll be happy to tell you my experience with this trading the system. Obviously, it's always going to be very good. We've got just a whole bunch of traders here that would be happy to answer questions for you, either here in the room with us today, or we also have some videos of interviews that we've done with our traders that, and we ask them questions that you would want to know. If you want to, see, did I put that on there? Oh, I didn't put, I swear I put that. I thought I put that link on there. If you go to our, oh, there it is. Thank you, Lisa. Man, I swear I thought I'd fixed that. But there's the link. Lisa put the link in there. You can go to our homepage, and on the far right on the menu at the top, you'll see Trader Spotlights. You can go to it there also. So hours of interviews with our traders to learn more about what we do. All right, and then also our YouTube videos. All right, so this is our special that we're having all through September. This is our Bunt Development Series special. We're going to offer you the pullback bundle, which is all of those indicators that we talked about today. The speed tick, the ricochet, the flash, the FT reset or first touch reset, the overbought oversold indicator, the McDiver, velocity indicator, and then our pullback alert. We're going to offer that for only $23.50, but we're going to also include having one of our staff come onto your computer and set it all up for you if you so desire. Okay, we'll even give you a private tutorial while we do it. And we don't do it in the middle of the night. You know, you're sitting there watching us do it. So I know that many of you are uncomfortable allowing somebody to come surfing in on your computer. So we only do it with your permission In fact, we need you to be there and watch us, and then we'll go over everything with you, give you a little brief tutorial. Now, I know that this was a lot of information, and we have a lot more forthcoming. But some of you are ready to go and you're ready to make a decision. And for those of you that are, if you do that by the 16th, so in just a few days, we're going to throw in lifetime into our trade room. If you want to join the trade room, you can. We'll give you lifetime membership to our trade room. We have people that'll buy it off the website at $2,500 for lifetime access, which is still cheap. But we're going to give it to you for free. Now, if you want to wait, that's fine. Certainly understand that, but we're going to knock it down from lifetime to just 3 months in the trade room. And if you still want to wait more, if you haven't gotten enough information yet, and you wait until the end of the month, we'll still give you a free month in the trade room. Okay. Now, if you want to take advantage of this but you want to learn more and you want to take the lifetime, if you go to PayPal, we've been approved to take the 6 months no payments. A lot of companies aren't given that option to provide because their service hasn't been as good, or they have a lot of complaints or have to give a lot of refunds or whatever. But PayPal came to us and said, because we've provided such good service and have almost no complaints, they extend us the ability to provide this 6 months no payment. So we're pass that on to you guys. So if you want to take advantage of this without having to pay for it down the road, I know some people say, "Oh, I don't have an account yet, haven't funded anything yet. I want to wait until everything's all." You don't have to do that. We can get you set up and squared away immediately, and teach you how to learn to do all of this stuff um, over the next 6 months. The markets that we trade in the trade room, we trade the Nasdaq, all of the equity indexes, Nasdaq, the Dow, not all of them, but the S&P 500 and the Russell 2000. We also trade gold and oil and the German futures index, the DAX, and the guarantee that we have is that our indicators will indicate and will do what they're supposed to do. And other than that, we don't have any kind of guarantee because we don't know how much time, effort, and energy you're going to put into using the indicators and practicing and following our instructions and being um, uh, uh, following a set of good, say, I have no, if you're asking, can I guarantee your success? Um, no, just like no no teacher can guarantee that student success if the student doesn't do the work. If you're looking for a shortcut, easy way, then I wouldn't really have much of a hope for your success. But if you're going to work hard at it and spend time, see, here's the thing. Just like a professional athlete, 90% of the time they spend at their profession is not in competition. Maybe only 10% is actually competing. The other 90% is doing the hard work, the conditioning, the studying, the practice, the drills, and we teach you how to do that. We teach you, we have a program called our Fast Forward program that teaches you how to do that because most traders have no clue how to go about practicing. It never actually even occurred to me, mostly because why would I practice something I have no confidence in? I never had confidence in myself or my trading system. So why would I practice it? Now, I thought I was working at my trading. I worked at adding indicators, reading forums like Big Mike. Somebody referred to Big Mike. Um, by watching videos, by reading books, by downloading every free indicator I could, by buying more monitors, by adding more time frames, by different chart types, by listening to every person that I thought was smarter than me at trading. That was what I thought I was supposed to be doing. That was, to me, working at my trading. And after 7 years, that work that I was doing had me no closer to being successful. I was still struggling as much as the first day when I knew nothing. So realize that, and so we've created a system, again, a fast forward program that teaches you how to practice your trading. Who's here that some of our Bunt traders that are using the fast forward program or use market replay and our trade room videos to sharpen your skills? Number of our traders, we have a whole lot of traders that use our fast forward program, and many of them, including Bill, I think is a VIP. The fast forward program comes with our VIP package. Now, if you want more information about the VIP package, I think Lisa has an unpublished special going on for the VIP package. You can contact Lisa, and she'll help you out with that. So I'm going to open it up to questions. I don't trade Forex, but I know a number of our traders do. If you'll notice on the, I don't know if you got a chance to watch the video of the event that we did on Thursday, but I did put up a Forex chart and showed it on the chart. You do have to do some tuning of a couple of the indicators to use them on Forex, but yeah, it works fine on Forex. Any market where there's liquidity, it works well. Any other questions? I'm happy to answer as many questions as you have today to help you make a good decision. Now, if you would prefer to talk to other traders that are trading our system, using our indicators, trading with us in the trade room, we'd be happy to provide you a list to contact. Many of these people like to do their due diligence, and we recommend that you do due diligence. See you, Raymond. Have a good weekend. Um, and so we will provide you with a list of people that use our indicators on a regular basis. And you can ask them why they do that. You know, it's interesting that more people don't ask, but I think it's because trading has to do with money, and people are tentative to talk to other people about money. Send Lisa an email, Grant, and she'll send it over to you. And we don't have the same list of just a few people. We like to rotate people in and out on the list, and some people will be brand new traders with us. Some people have been with us for a while, and then some people will have been with us for years, which is another interesting thing. We have traders that have been in our trade room for years. Now, why would they be there for years if they weren't seeing some success? You know, so that's a good thing to ask people if you want to contact some of them, is how long they've been trading with us, and that to me would tell me a lot. Just that right there, just how long you've been trading with us, and if somebody's been trading for years with us, you got to think, well, people don't usually stick with something that's not working. Yeah, Jack, you certainly can. Now we have two options for that. You can certainly contact Lisa for a trial of the trade room, or not everybody can spend time in the trade room because maybe you have to go to work. So we've prepared a video of a typical week in the trade room, so you can watch it at your leisure. And yes, on the video, I don't just cherry pick just a few trades. There's me taking winning trades and losing trades, or calling out trades ahead of time, talking you through trades, talking about trades uh, after the trade is over and going over the trade. So that's a lot faster way than sitting in the trade room, because we are very patient and the trade room, until the qualifying process is in place. We qualify step 1, 2, 3, 4, 5, and then pull the trigger. It can be a very quiet and slow place. But then again, it can be very busy. We just never know. We only trade what the markets give us. And we do not sit there and speculate. I do not sit there and teach over and all day long, over and over and over again. We're a group of people that trade together, and believe me, they've been coming for years, and they don't want to hear me say the same things every day, over and over and over and over and over and over and over again. So it is a trading room versus a teaching room. Now we do have throughout the week, we do have scheduled teaching and training events aside from the trade room. And we also have videos for teaching aside from the trade room. So it's not that we don't provide teaching. We just we trade in the trade room and we teach in the teaching venues. But I mean, like I said, I do, as we have time, I will discuss setups as I see them. It's a good question. Any other questions for me this morning? Awesome, Andy. Thank you. The VIP is a kind of a unique program. It's a kind of like once and done program, meaning that in the VIP program, you get all of the indicators that we use in the trade room. Any indicators we ever develop in the future that we use in the trade room, you get those for free. For example, we have a new indicator that our VIPs will be getting for free next week, I think. I got to finish the documentation. But as soon as it's finished, since they're VIPs, they all get it for free. They also get a group mentoring session every Wednesday. We call the aha moments. And this is the things that I discovered as I kind of turned my trading career around from being a miserable loser. I discovered some things about trading that are not immediately obvious to most people. And I did this when I was creating a mentoring program, and I realized, kind of in hindsight, as I'm creating this program, that I had a lot of these ahas along the way as I was becoming a more successful trader. These ahas are actually what I call the other 80% of trading. To me, trading is about 20% mechanical, which is the easy part, when to put on a trade, how to manage the trade, indicators, what the indicators are doing, all of that. A lot of the stuff we've talked about today. That's 20% of what you need to know for trading. But most people don't know that because that's all that's ever talked about. That's all you see. Now, if you've been trading for a while, you realize that, wait, there's more to this trading thing than just putting on a trade and getting out of it and making a bunch of money, right? You found out there's a lot of things get in the way of your success. This is what we talk about in our aha moments. How to build a strong foundation as a consistent winner and then build on that. Okay, so That's one of the more popular parts of being a VIP. You also get the Fast Forward program that I discussed. You get that for free. What am I missing? Priority technical support is also included for free. Um, lifetime trade room. Not sure if I said that. So really, it's a one and done thing. There's nothing else to buy once you're a VIP, unless we um, introduce a product that is not trade room related. Then that wouldn't be included. Yeah, by far, most of our members either start out as a VIP or upgrade to VIP. Especially right about now when we're about to release a new indicator, which means that all of our prices will be going up. The VIP price will be going up. Of course, the indicator price, all the package prices will be going up as we add another indicator. But VIPs, once you've paid, you're done paying. Awesome. Is that Rocky? Roki? Roke? Sorry, I slaughtered your name. Any more questions? These are all good questions. Rocky. Roki? Sorry. There we go. Rocky. I like that name. Well, we want to thank you all for coming out on a weekend and joining us. I hope this was informative for you. If we can be of any help to you in your trading, we'd certainly like the opportunity to show you what we've got and what we can do and how we really do have an undeniable edge in trading. Happy to have our clients, our traders, talk to you if that would be helpful for you. Have Skype, email, however, whatever you need to become more comfortable with this style of trading and what we do and the intentional trader and any of that. Um, we're very customer service driven. We tend to, or we try to, under promise and over deliver. So give us a chance, and we'll see if we can help you. And beyond that, hopefully we'll see you all next week, or hear from you over the weekend. And I hope you have a great rest of your weekend, and talk to you soon.